Bitcoin saw a brutal 7% flash crash as a result of the US government selling over $2 billion worth of Bitcoin. This resulted in a cascade of selling pressure, pushing Bitcoin to 65.5k, a critical level of macro support. In today's video, we're going to be discussing not only the macro charts, but the short-term charts as well, going over the key levels you need to be paying attention to, exactly how the price action is reacting, and what, if any, impact this has had on the macro structural levels. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Today, we have a lot to be going over. We are going to be discussing Bitcoin from a short-term and a macro perspective, discussing exactly what has occurred in the last 24 hours, the key levels you need to be paying attention to, and how the price action is currently developing. Are we going to see the bears reclaim and push the price even lower, or will the bulls step back in and push the price upwards? We're going to be diving deep into the macro charts, discussing what impact this recent short-term correction, if any, has had on the macro structures of Bitcoin and the overall macro trend, and we'll be finishing up discussing the upcoming halving event and how we have historically seen the price action move toward the downside within those 10 to 15 days leading up to the halving event. We'll be discussing in detail that. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on the VIP group. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to our main VIP channel, you'll get access to our group chats, our general chat, trading chart and education chat, help, news, daily video, and trade setup chat. If you're interested in joining all of that, contact us in the pinned comment of the free channel for more information. Let's go ahead, guys, and dive on in to today's video. So let's get into it, guys, discussing everything we outlined in the intro, but starting off with that market data. How are we looking on that 24-hour volume? 24-hour volume is up 23.08%. So a pretty significant surge, sitting at 239 billion. 24-hour volume and liquidations have both increased, so liquidations up 46.87%, sitting at a whopping 458 million, nearly half a billion in liquidations. Of the 458 million, we have seen 100 million come from short positions and 357 million come from long positions, as Bitcoin quite literally plummeted around 7% in a very small period of time, about 5 minutes. We're discussing what has happened over here and what this means all in just a moment. Moving over to the DXY, let's go ahead and jump onto it. The DXY has hit our target. We discussed over the last few weeks that we were expecting the DXY to continue toward the upside to retest the neckline of resistance at the 104.9 to 104.8 area, this area of resistance right over here. We can see the DXY has now retested this level, and short term it has rejected from this level. There are two possible scenarios from this point. So our target has been hit, like we said. The next scenario is we do break upwards, and if we break upwards from here, this is going to be very bad for risk assets markets. We could see extended corrections over the next few weeks, potentially months, maybe month or two, if we do see that DXY move toward the upside, depending on how aggressive it moves upwards. Until then, resistance is resistance until it is not, and the most likely scenario is still going to be a rejection from that level, an eventual retest of the current uptrend we have been developing since the start of March. A loss of this level will send the DXY back into a short-term downtrend to retest our local lows at 102 to 103. Definitely keeping an eye on the DXY over the next coming weeks, particularly at the level of reaction at this neckline, to see how we develop. Moving over to the broad markets, S&P 500 has seen a short-term correction again. Guys, nothing too unexpected over here. We did hit that 5,300 psychological level of resistance again. These whole numbers are going to be acting as levels of psychological resistance moving forward. Short-term corrections should be considered healthy, provided we remain above our 5,000 level. It's only if we lose 5,000 does the macro structural integrity of this trend actually risk turning into a macro downtrend. Until then, any short-term correction that does develop, as I've been saying, should be considered a healthy correction, and you should be looking for re-entries or buying opportunities at the bottom of these moves. Overall, still looking very good on the macro. One red candle does not define the trend. Moving over to the Dow Jones, a very similar scenario over here. We have seen a pretty bearish engulfing candle here on the weekly, again with 2 days and 22 hours until a close. We do have quite some time to spin that candle back around. Again, provided we remain above 38k, nothing of macro concern. If we lose 38k, we are looking very, very bad for a correction back down to 36.5k. Until then, any correction back even down to 39k, 38k should be considered healthy pullbacks on the broader scale. With that being said, let's go ahead and jump over to Bitcoin, because like we've said, we have a lot to be discussing. So let's move on in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck into Bitcoin. So starting over on the short-term charts. As we can see, Bitcoin has had a pretty brutal last 24 hours. If we quickly go over what has developed on the price action, we saw a brutal correction on that short-term time frame, which took Bitcoin all the way back down to not only retest that 2-month-long uptrend, but our major level of high time frame support at 65.5k. So let's just go over what occurred. If we look at the price action, we had this nice strong horizontal consolidation developing on the short-term chart. In that horizontal consolidation, we had a diagonal uptrend within that consolidation, resulting in a pattern we identified as an ascending triangle pattern. Now, ascending triangle patterns are bullish structures. If we look historically, they have around a 68 to 69% probability of an upward break, and that opens it up to around a 30% chance of invalidation. In this instance, we did see that structure invalidate, and we saw the price action drop towards the lower range of our current horizontal range. We told you guys in yesterday's or the day before's video, if we were to lose this horizontal range, we would see a correction back down to retest our major uptrending support line with confluence at our 65.5k region of support. Now, our 65.5k region spans from 65.5 to 65.8, and that is a high time frame level of support, which equates to, again, that weekly candle high of the 2021 all-time high. So we did see the breakdown. It was a brutal correction. It definitely was unexpected, and the move was the least probable scenario based on the data we had at the time of analysis. If we do look at what caused this correction, there is speculation going around that this large correction toward the downside, this 7% correction that occurred in 10 minutes was a consequence of if we move over to the free channel over here, was a consequence of the US government selling over 30,000 Bitcoin, which is around $2 billion on Coinbase. And again, this would have accounted for a significant drop in price, and makes sense if we look at when this price corrected, and again, when this news is coming out. A lot of people are saying, well, the price corrected yesterday, but we're only getting the news that they've sent this money in today. And I asked you and I posed to you, Why would they tell you they are going to sell, and why would they give you warning that they are moving the price or they're going to sell their Bitcoin? It is irrational to assume that. If we look historically at the prior times the US government have sold seized Bitcoin, they sell it, and then in a day's time they announce they have moved the Bitcoin, but it is always after the fact or after the action. Remember, there is no reason they are going to give you an announcement or warning that they are moving their Bitcoin or warning that they're going to sell it. They generally give you the news after the event. The public get the news last. So we saw this cascade in the price action with a significant correction, and then we saw a bit of a bleed out on Bitcoin's price action in the last 12 or so hours as we get the weak hands or the emotional holders of Bitcoin end up selling their positions at a loss as Bitcoin just suffered a large correction. So generally when we see these large corrections or large increases in price, it does garner a degree of emotion in the market, whether it be euphoria or fear, and that euphoria and fear persists in the market for a small period of time after the fact, which results in the price action slowly pushing in that direction before an eventual continuation or an exhaustion. So let's go ahead and talk about now the key levels we are watching on the price action. If we zoom out and ignore this trend line for just a moment, and we focus on the key horizontal levels, the key structural levels, the key levels we are really focusing on are still holding as support. If we take a look, remember, this is going to be our bullish zone on the short term. This is going to be our short-term bearish zone. This is our high time frame bullish zone. This is our high time frame bearish zone, and the zone between the 65.5, okay, to 69K is that neutral territory. This is the danger zone. The danger zone is simply the zone between the weekly all-time high, okay, which is 69K, and the weekly high candle of the 2021 cycle, which is at 65.5K. This area here is a major zone of contention and a major danger zone, as a directional breakout from this zone will likely determine the directional continuation for Bitcoin, as we have previously stated. Now, we did see a directional breakout of this level continuing upwards, but with that directional breakout, we were unable to clear the prior short-term level of resistance required for the price action to break upwards before we saw this significant cascade in selling pressure as a result of a large transfer or a large selling order entering the market books. So we did see what you would call an unexpected amount of selling pressure entering the market, deviating the price away from the expected trajectory of the current trend and based on what the technical strength is suggesting. But if we look at the price from a structural perspective, yes, we are still at support. No, we do not expect a continuation down to 60K while we are in this neutral zone. It is only if we lose this neutral zone would we expect a continuation lower, and what would we be looking for a confirmation of a loss of the zone? Well, we have to look at what we have seen in the past. So if we look in the past, guys, we take a look at, the daily candle, for example. The last time we saw a daily candle close below this level was when we saw a correction to 60K. So for us to say we are looking for a continuation lower, we look at historically how the price action has developed. We are looking for a daily candle close underneath 65.5 for a greater probability for a continuation as to 60 for confirmation that this area has been lost on the short term. Now, that doesn't mean the price action has losses on the higher time frame. If we take a look at the higher time frame, for 65.5K to be lost on the higher time frame, we would need to close a weekly candle below it, okay? A weekly candle, and that weekly candle is closing in 5 days. So theoretically, we could see a wick down and back up, provided we close that weekly candle above the level in 5 days. It would technically be holding as support. Remember, it is about time frame, it is about perspective, and it is about the viewing frame or the viewing time horizon you're actually viewing the price action on. So even if we see a large wick down and push upwards, if we close that weekly candle above 65.5K on the weekly chart, the 65.5K was able to hold as support. On the short-term chart, that is a different story. So if we're looking for a weekly breakdown, we are looking for a weekly candle close below this level. If we're looking for a short-term continuation downwards, we are looking for a daily close below this level. So now that brings us to the statement, what is the price action doing right now and where is Bitcoin likely to go? So let's go ahead now and dive into the short-term charts. But before we do, actually really quickly, we want to announce that again. If we do get above 69K, we expect that continuation upwards. If we get below, we expect that continuation downwards. As we expect a daily candle close to develop that price action down, we would need to see a daily candle close above here to develop the price action upwards. And again, if we want to see a macro continuation, we need to get above 74K to enter price discovery upwards again. So let's go down into the smaller time frame price action and really discuss, what is happening at the price and what we are expecting. We're going to go ahead and bring up our RSI, our momentum indicator, to take a deeper look at this price action. So what we can see from that rejection at the high point of that horizontal channel, we have developed a downtrend, right? We have a 2-point downtrend, so we don't have a very strong or valid downtrend. This is going to be only a 2-point downtrend, but it's the best we have at the moment. This downtrend is a reflection of the trajectory of price action over the last 24 hours. This is the direction of which the price action has been moving within the last 24 hours. So for us to say Bitcoin is back in an uptrend, for us to say Bitcoin is going to continue back upwards, we do need to see a breakout of this level. We do need to see a breakout of that level. While we fail, or while we do not break above this, or while we remain under this level, the likelihood of a continuation lower is still very much on the table, okay? It is a risk, it is a real risk for a continuation lower while we remain in this overall downtrend. So let's now break it down to an even smaller time frame. If we look at a 15-minute chart, we can see that the bulls are really trying here to regain strength. What we are seeing over here is a classic example of expansion and compression between our overall moving average. So we look at the 50 EMA, we can see we have expansion, and from that expansion, we have got compression, we have got expansion, we have got compression. And this is a good indication of, again, bearish exhaustion. It shows us that a period of volatility, a period of reduced volatility, a period of volatility smaller than the first period of volatility, and thus more compression. This is an indication of exhaustion. This is telling us that the sellers, or the selling pressure moving into this area of support, is lessening, it is weakening. However, the bulls have not quite yet regained that control, and thus the selling pressure could potentially pick back up again and push the price lower. So what we would need to see for the bulls to actually step in and regain control, other than the breakout of this downtrend, we would need to see reclaims or reclamation of these local high points. So we're looking at the short term, we would need to see the price action break above these local highs in the short term to result in a continuation back up to these highs, and we need to continue to break through these high points to retest our downtrend. Until then, we do run the risk of corrections back to these equal lows and develop some sort of horizontal consolidation between these 2 points before again a directional continuation lower or upper. So again, that is what we are looking for on the short term for a continuation upwards. The bulls are attempting to regain control. We can see that in the data over here. However, they have not done so yet. They are currently still struggling greatly. If the bears want to push the price lower, again, we need to break below these equal low points. A loss of these equal low points will send Bitcoin back toward the downside to establish a new local low. Overall, looking pretty sketchy on the time frames, on the daily, on the higher time frames. On the short term, it is starting to look very, very weak. Moving over, guys, let's go ahead and talk about the high time frame again. Like we said, high time frame charts are looking very, very decent, and although they are looking pretty bad over here on the short term, if we zoom out and really take a look at the trend itself, it is still strong. And we told you guys, we have been in Bitcoin since 16.5k. Even if we see a correction, we are safe, okay? The only people really panicking, the only people getting emotional in the comments, only people freaking out are the people that literally FOMO'd in right at the top. And you know, you can't blame them, right? If you FOMO'd into the top, you're likely bought on emotion, therefore your emotions are pretty high, you're pretty emotional attached to the price action, you're going to be panicking. But if you bought when we suggested, the only time we suggested, which is down over here, if you've been following the trend objectively still is up. The trend objectively is still strong, and like I say, one candle does not define the trend, it is simply one candle. We need to see continuous signals of weakness for trends to start developing and reversing. One candle is just a warning sign. It is not confirmation, it is just a warning sign. And this is a warning sign. There is no doubt this is definitely a warning sign. However, if we look at the high time frame structural integrity of the trend, the 60K region is still going to be the most significant area in terms of macro structure. And what do I mean by that? If we go back to the 4-hour chart, we can see again, the 60K region, bring up the VIPV, is that key level of support. We have our low over here, our low over here, our low over here. Key level of support before a significant correction for Bitcoin. This is a key area of liquidity. A loss of 60K will result in deviation below this entire range of price action, pushing the price downwards. If we really zoom out and look at the price action board, what we have here is a nice strong consolidation range between that 74K region and the 64K region, bouncing between these levels. If we lose that low, that is when we enter a high time frame downtrend, potentially to 52, potentially to 58. So provided 60K is able to hold as support, all these corrections should be considered healthy high time frame corrections unless 60K is lost, and then we expect the bears to really step in and push that price downwards. So let's go ahead now and talk about the upcoming halving event, guys, because this is a very interesting thing. The halving event is in literally 17 days. It's right around the corner. And the halving event, we know, is a bullish event for Bitcoin. So bullish inherently, it has intrinsic bullish properties, the halving event. But what many people may not have noticed is that the month of the halving event itself is actually a red month. If we take a look, this is the halving event month. It is a red month. If we move over, this is the halving event month. It is a red month. This is very, very interesting because if we look at the opening price of this monthly candle, the opening price of this monthly candle is 71.2K. So if we look at that and we say, well, historically we have seen red months for Bitcoin, it is unlikely we break back above 71.2K for this month. It is pretty likely we may see history repeat itself, and we may see a red month yet again for the month of April, for the halving month. Now, it is also important to note that historically, even though we have seen these red months occur within the halving events, neither scenario resulted in a significant correction that broke the high time frame structural integrity of the bull run. And for the high time frame structural integrity of the bull run to break, we would need to see a breakdown of the high short moving average and again, the low short EMA of the pi cycle indicator. If we take a look at where that is sitting around 52,000. Again, if we go back to the short-term chart, and we zoom out to the 4-hourly chart, a breakdown of 60,000 could take us as low as 52,000. So we have confluence here with that level of support if we do see a breakdown of 60K, and if we do see what we have seen in the past play out, which is a potential retest of the high short, low short EMA on the month of the halving event. So we'll show you the halving event month. We saw a correction from the high long moving average, which is the white line, back down towards these mid line moving averages of the pi cycle. That was in the halving event month. If we look at the halving event month in the last cycle, we saw a correction back into these ranges once again. If we look at this cycle, we could potentially see that again. Now, there is one difference this cycle. The situation is that we are retesting the prior all-time high of the prior cycle. So we are less likely to see a scenario of this. We are more likely to see, or it is more likely we are in a situation of this red box, which is the area of which we retest that prior all-time high for the prior cycle. And if we zoom in and take a look at the price action during that period, we do see some corrections, we do see some significant fluctuation before we then enter that basically only up phase. And this is really it, guys. When we see, okay, the breakout, and we'll show you, let's go ahead and, move over to the other cycle over here. When we see that breakout of the high long moving average, that white line you can see right over here, after the halving event, okay, after that consolidation of the all-time high, that is when we enter that parabolic aggressive phase. If we look again over here, we break above the high long right over here, we enter that parabolic aggressive phase. Currently, if we look at the current price action, we are not above that level yet. We are sitting right in that range, rejecting from that level. So we're in that red box zone. The red box zone that we have seen in the past, the prior all-time highs, is exactly where we are now. So we are expecting chop in this zone before an eventual breakup and continuation. So no, the high time frame trend has not been negatively impacted from this short-term correction. Yes, this short-term correction could push the price lower. No, we do not expect a correction significantly lower while 60K holds the support. Yes, if 60K breaks, we could see a correction as low as 52,000. But even if we see all of that, the 4-year cycle is still intact. The bull run is still intact because for the bull run to invalidate, we need to see a loss of the long short and the high short moving average sitting around 52 to 48,000. Thank you for watching. Have a fantastic day. We'll catch you in the next video tomorrow. Cheers.